On the morning of March 14, 2026, a swarm of drones struck Fujairah, the world's second-largest bunkering hub. Fire engulfed oil storage tanks. Loading operations suspended. 70 million barrels of storage capacity suddenly offline. Within 90 minutes, Brent crude jumped $11. Within 3 hours, certain trading desks had made more money than most people will see in a lifetime. This is not coincidence. This is not market reaction. This is architecture. You've been told the Strait of Hormuz crisis is about nuclear weapons, about Iranian aggression, about regional stability and American security interests. You've absorbed a narrative where nations clash over ideology and territory, where the good guys wear our flag and the bad guys wear theirs. That narrative is the product they're selling you. The real product is volatility. The real product is price movement. The real product is the transfer of wealth that occurs every time a headline mentions Hormuz, every time a tanker is threatened, every time fire illuminates the night sky over oil infrastructure. War is expensive. Peace is cheap. Instability is profitable. Over the next 17 minutes, I'm going to expose 12 financial agendas operating behind the Strait of Hormuz attacks. 12 revenue streams that depend on continued crisis. 12 reasons why the most powerful financial interests on Earth need this conflict to continue regardless of its human cost. By the end, you'll understand that the oil trap isn't about oil. It's about money. It's always been about money. And the people dying in the Middle East are dying to make other people rich. Subscribe now. Follow the money. It never lies. Agenda number 1. Oil futures traders with advanced information access are extracting billions from price movements they can predict before the public knows anything is happening. The oil futures market trades approximately 3 million contracts daily, each representing 1,000 barrels. A $1 price movement on a single contract represents a $1,000 gain or loss. Multiply by millions of contracts. Multiply by the $10, $20, or $30 swings that occur during Hormuz crises. Now consider who has information advantages. Defense contractors with classified briefings know strike timelines before CNN. Intelligence officials know threat assessments before they're declassified. Government insiders know policy decisions before press conferences. All of these people have family members, friends, and future employers in the financial sector. The information doesn't need to be leaked illegally. It seeps through social networks, through dinner conversations, through the revolving door between government and Wall Street. A former CIA analyst now working at a hedge fund doesn't need to steal secrets. He just needs to understand how the system works well enough to predict what comes next. Goldman Sachs, JP Morgan, Morgan Stanley. Their energy trading desks employ people whose entire job is predicting exactly these price movements. When the Fujairah attack occurred, positions had already been established. The profit was locked in before the smoke cleared. This isn't conspiracy theory. This is market structure. Information asymmetry is how sophisticated traders extract value from less informed participants. The chaos you see on television is the opportunity they see on their trading screens. Agenda number 2. Defense contractors have locked in record-breaking weapons sales to Gulf states whose purchasing justification depends entirely on continued Iranian threat. Saudi Arabia is the world's largest weapons importer. Since 2015, the kingdom has purchased over $100 billion in American military equipment. The UAE ranks among the top 5 global importers. Kuwait, Bahrain, Qatar all maintain massive procurement programs. The justification for these purchases is always the same. Iranian threat, Hormuz vulnerability, regional security. If the Iranian threat disappeared tomorrow, Gulf monarchies would face uncomfortable questions from their own populations about why billions continue flowing to Lockheed Martin instead of domestic development. The threat justifies the spending. The spending justifies the contracts. The contracts justify the stock prices. Raytheon's Patriot missiles, Boeing's F-15s, General Dynamics tanks, and armored vehicles. Every system deployed around the Gulf represents revenue that depends on the threat persisting. Peace would collapse the order books. Sustained tension sustains shareholder value. The companies don't need to start wars. They just need wars to continue. They need threat levels elevated. They need the customers scared enough to keep buying. The Strait of Hormuz attacks serve this agenda perfectly. Every drone strike on oil infrastructure validates the threat assessment. Every missile barrage demonstrates why Gulf states need more interceptors. Every tanker threatened proves the investment was necessary. The defense industry didn't cause the Hormuz crisis, but they have hundreds of billions of reasons to ensure it doesn't end. Agenda number 3. Insurance and reinsurance companies are extracting unprecedented premiums from war risk policies that transform regional instability into guaranteed global revenue. Every vessel transiting the Persian Gulf carries insurance. Hull insurance for the ship itself, cargo insurance for what it carries, liability insurance for environmental damage, and in times of conflict, war risk insurance that covers losses from military action. In peacetime, war risk premiums for Gulf transit might run $50,000 per voyage. During active hostilities in 2026, those premiums have spiked above $500,000. Some voyages now carry million-dollar war risk charges. Lloyd's of London, Munich Re, Swiss Re. The giants of the reinsurance industry have sophisticated models that price this risk. But here's the secret. The models are designed to profit regardless of whether attacks occur. If no attacks happen, the premiums are pure profit. If attacks happen, the premiums were priced to cover expected losses plus margin. Either outcome generates returns. The only scenario that hurts the insurance industry is prolonged peace that allows premiums to collapse back to baseline. Approximately 15,000 vessels transit the Strait of Hormuz annually. At elevated war risk premiums, the insurance industry extracts billions in additional revenue that didn't exist before the crisis. This money doesn't appear in any casualty count or damage assessment. It's invisible wealth transfer from global shipping to financial institutions. Every attack that occurs validates the premium levels. Every near miss that makes headlines justifies continued elevation. The insurance industry profits from fear as much as from actual damage. We're only 3 agendas in, and you're already seeing the pattern. The crisis isn't a problem to be solved. It's a revenue stream to be maintained. Subscribe if you want to see who else is extracting wealth from the Strait of Hormuz. Agenda number 4. The petrodollar system requires periodic demonstrations of American military commitment to Gulf security, and Hormuz crises provide that demonstration while reinforcing dollar hegemony. Since 1974, global oil has been priced and traded primarily in US dollars. This arrangement forces every oil-importing nation to maintain dollar reserves, creating permanent demand for American currency regardless of American economic fundamentals. The petrodollar doesn't maintain itself. It requires credible American commitment to Gulf security. It requires Gulf states to believe that pricing oil in dollars brings American military protection as part of the package. Every aircraft carrier deployed to the Persian Gulf reinforces this message. Every missile defense battery installed in Saudi Arabia demonstrates the commitment. Every retaliatory strike against Iranian targets proves the protection is real. The cost of this commitment is borne by American taxpayers. The benefit flows to American financial institutions that profit from dollar demand. The Federal Reserve can print money without immediate inflationary consequences because the world needs dollars to buy oil. Hormuz crises are not threats to this system. They're advertisements for it. They demonstrate that the American military will indeed protect oil flows, that the commitment is credible, that pricing oil in dollars brings security benefits no alternative can match. When the crisis eventually subsides, the petrodollar will emerge strengthened. Gulf states will have fresh evidence that American protection works. Nations considering alternatives will reconsider. The financial architecture that transfers wealth to American institutions will continue for another generation. Agenda number 5. Strategic Petroleum Reserve Arbitrage allows governments to release oil at crisis prices and replenish at lower prices, generating billions in effective profit from volatility they help create. The International Energy Agency coordinated the largest emergency oil release in history in response to the Hormuz crisis. 400 million barrels from strategic reserves worldwide, with the United States contributing 172 million. The official purpose is stabilizing markets and protecting consumers from price spikes. The financial reality is different. Governments release reserves when prices spike, selling oil at elevated levels. When the crisis subsides and prices fall, they replenish reserves at lower levels. The spread between release price and replenishment price represents effective profit, potentially billions of dollars per cycle. The U.S. Strategic Petroleum Reserve was largely filled when oil traded between $20 and $40 per barrel. Releases during crises occur when oil trades above $100. Eventual replenishment will occur when prices normalize. This isn't illegal. It's not even hidden. But it creates an incentive structure where governments benefit financially from price volatility. They have the power to influence through policy decisions. The officials managing these reserves have career incentives aligned with demonstrating their importance. Crises that require reserve releases prove the reserves are necessary. Calm periods where reserves sit unused invite questions about whether the investment is worthwhile. No one is suggesting governments create crises to profit from reserves. But the financial architecture means they don't lose money from crises either. And incentives matter. Agenda number 6. Shipping companies with diversified operations profit from rate spikes that devastate smaller competitors, accelerating industry consolidation under their control. Global shipping is dominated by a handful of massive companies. Maersk, MSC, CMA CGM, COSCO. These giants have diversified operations, financial reserves, and hedging strategies that smaller operators cannot match. When Hormuz crises spike shipping rates, large operators can absorb costs and pass them to customers. Their contracts include fuel surcharges and war risk clauses that adjust automatically. Their financial reserves can cover temporary disruptions. Smaller shipping companies lack these advantages. Rate spikes crush their margins. Insurance increases become unaffordable. Customers demand prices they cannot profitably offer. Many face bankruptcy. The crisis accelerates consolidation. Small operators fail or sell to larger competitors. The industry emerges more concentrated, with fewer players controlling more capacity. Reduced competition means higher baseline rates even after the crisis ends. Major shipping companies don't need to cause Hormuz crises. They just need to survive them better than their competitors. The crisis does the work of eliminating competition that would otherwise require years of price wars. Every tanker that diverts around the Cape of Good Hope adds weeks to voyages and billions to costs. Those costs fall disproportionately on operators least equipped to absorb them. The giants grow larger. The industry consolidates. Market power concentrates. Agenda number 7. Energy infrastructure investors with stakes outside the Gulf region benefit as Hormuz vulnerability drives capital toward alternative facilities they already own. The Strait of Hormuz handles 20% of global oil flows. But it's not the only oil infrastructure in the world. The Gulf of Mexico, the North Sea, West African offshore platforms, Canadian oil sands, Russian pipelines to Europe and Asia. Investors with diversified energy portfolios benefit when Hormuz vulnerability drives demand toward non-Gulf sources. Every tanker that can't transit Hormuz represents demand that flows elsewhere. Every insurance premium that makes Gulf shipping uneconomical redirects business to alternative routes. Private equity funds and sovereign wealth have invested hundreds of billions in energy infrastructure worldwide. Their returns improve when Gulf infrastructure becomes risky and alternatives become necessary. This doesn't mean they sabotage Hormuz deliberately. It means they don't need the crisis to end. It means their financial interests are not aligned with resolution. It means their lobbying, their political contributions, their influence on policy all flow from incentive structures that benefit from continued instability. Capital flows towards safety. Hormuz instability makes everywhere else seem safer. Investment follows. Returns materialize. Agenda number 8. Currency speculators are extracting billions from movements in the Iranian rial, Gulf currencies, and even the dollar as markets react to each Hormuz development. Currency markets dwarf oil markets in daily trading volume. Trillions of dollars change hands daily. Even small movements represent enormous profit opportunities for traders positioned correctly. The Iranian rial has collapsed under sanctions pressure and conflict stress. But collapse isn't linear. It happens in waves, with partial recoveries followed by further declines. Each wave creates trading opportunities for speculators who can predict the timing. Gulf currencies, theoretically pegged to the dollar, face pressure during crises that raise questions about regime stability. the Bahraini dinar, the Omani rial. Even the Saudi rial shows stress when oil revenue projections dim. Speculators position against these pegs, profiting when central banks are forced to intervene. The dollar itself moves on Hormuz news. Crisis drives flight to safety, strengthening the dollar. Resolution prospects weaken the dollar as risk appetite returns. Traders who can read the cycle profit from both directions. Hedge funds employing former Treasury and Federal Reserve officials have expertise in predicting currency movements driven by geopolitical events. They understand how policy will respond because they used to make that policy. The information edge is structural. Every Hormuz headline moves currencies. Every movement transfers wealth from those who react to those who anticipate. Agenda number 9. Cryptocurrency markets, supposedly decentralized and independent, are being manipulated by actors using Hormuz volatility to pump and dump digital assets marketed as sanctions hedges. When conventional financial channels close, alternative channels gain appeal. Cryptocurrency has been marketed as a way for sanctioned nations to evade restrictions, for individuals to protect wealth from currency collapse, for businesses to conduct transactions outside the dollar system. This narrative drives demand during crises. Bitcoin and other cryptocurrencies often spike alongside geopolitical tensions as speculators bet on increased adoption. But the crypto market remains dominated by whales, large holders who can move prices through concentrated buying and selling. These actors don't need to believe in crypto's utility. They just need others to believe during crises. The pattern is visible in 2026 data. Hormuz attacks correlate with crypto pumps. Crypto pumps correlate with whales selling into retail buying. Retail investors, convinced crypto will benefit from dollar system stress, buy at peaks. Whales who created those peaks exit with profits. This manipulation isn't specific to Hormuz. It's endemic to crypto markets. But Hormuz crises provide narrative fuel for pumps that wouldn't otherwise have justification. The financial architecture extracts value from anyone who believes the marketing. Agenda number 10. Reconstruction and infrastructure contractors are positioning for post-conflict contracts worth hundreds of billions, creating financial incentives for destruction that must eventually be rebuilt. Every oil facility damaged will be rebuilt. Every port disrupted will be restored. Every pipeline ruptured will be repaired. The destruction isn't permanent. It's a future revenue stream for the companies that will do the rebuilding. Halliburton made billions from Iraq reconstruction. Bechtel made billions. KBR made billions. The pattern is established. War destroys. Reconstruction pays. The companies best positioned for reconstruction contracts are those with existing relationships, existing expertise, existing lobbying presence. These companies don't need the destruction to be complete. They need it to be expensive to repair. They need contracts that stretch for years. They need cost-plus arrangements that guarantee profit regardless of efficiency. Iranian infrastructure targeted in 2026 will eventually be rebuilt, whether under the current regime or a successor government. The contracts will flow to companies prepared to execute them. Preparation is happening now. This agenda doesn't require anyone to cause destruction deliberately. It just requires that financial interests are not aligned with preservation. It requires that powerful actors don't lose when things break. They just wait for the repair contracts. Agenda number 11. Media conglomerates are generating record engagement and advertising revenue from crisis coverage that would collapse if the conflict ended. War is good for ratings. Crisis is good for clicks. Fear is good for advertising revenue. CNN, Fox News, MSNBC. Their viewership spikes during Hormuz developments. Their digital platforms see traffic surges. Their advertising rates adjust upward to reflect increased audience. The financial incentive is toward coverage that maintains tension. Not fabricating news, but emphasizing the most dramatic developments. Highlighting threats, downplaying diplomatic progress, framing every statement in terms of potential escalation. This isn't conspiracy, it's media economics. Editors make decisions about which stories to lead with, which experts to feature, which angles to emphasize. Those decisions are shaped by what generates engagement. Engagement is shaped by fear. Social media platforms amplify the effect. Algorithmic promotion rewards content that generates reaction. Fear generates reaction. The system optimizes for fear without anyone explicitly deciding to spread it. The result is information environment that makes resolution seem impossible and escalation seem inevitable. The audience remains engaged. The revenue continues flowing. Agenda number 12. Political fundraising operations on both sides are using Hormuz crisis to generate donations from constituencies who believe their preferred policies will deliver security or peace. War is a fundraising opportunity. Hawks raise money by promising stronger military response. Doves raise money by promising diplomatic alternatives. Both need the crisis to continue at levels that keep their constituencies alarmed and donating. Defense industry PACs contribute to politicians who support military action. Peace activist organizations fund politicians who oppose it. Both sides of the political spectrum extract donations from the same crisis. The politicians themselves benefit from crisis that keeps them relevant. The foreign policy expert who appears on television builds their brand. The think tank analyst who provides commentary gains visibility. The former official who offers perspective raises their speaking fees. Resolution would end the fundraising cycle. The donors would turn attention elsewhere. The politicians would lose a mobilizing issue. The experts would lose their platforms. No one consciously sabotages peace for campaign contributions. But the incentive structure ensures that resolution faces headwinds from every direction. Too many careers depend on continued crisis. 12 agendas, 12 revenue streams. 12 reasons why the most powerful financial interests on Earth need the Strait of Hormuz crisis to continue. You've now seen what the news coverage never shows you. Not the missiles and the drones and the tankers. The money behind them. The transfers of wealth that occur with every attack. The profits that depend on continued instability. The oil trap isn't about oil. Oil is just the commodity that justifies the architecture. The real trap is financial. It's the system that extracts value from crisis, that profits from fear, that turns human suffering into shareholder returns. Defense contractors don't need peace. Insurance companies don't need peace. Currency speculators don't need peace. Reconstruction contractors don't need peace. Media conglomerates don't need peace. Political fundraisers don't need peace. Peace would be a market correction. The people who die in Hormuz attacks are not casualties of war. They're externalities of a business model. Their deaths are priced into the system. Their suffering generates the volatility that makes the system profitable. This is the real oil trap of 2026. Not a geographic choke point that threatens energy supplies. A financial architecture that requires continued crisis to function. A system designed to extract value from instability that therefore perpetuates instability. The trap isn't that Iran might close the strait. The trap is that too many powerful interests need the strait to remain dangerous. And as long as danger is profitable, danger will continue. You've now seen through the trap. You understand that the headlines you consume are surface phenomena, that beneath them, money flows in directions the coverage never traces. That the war isn't about the reasons they tell you. It's about the money they don't mention. What you do with that understanding is your choice. But you can never watch Hormuz coverage the same way again. You can never see oil prices spike without wondering who profited. You can never hear experts explain the crisis without asking who pays their salaries. Subscribe if you want to keep following the money. Share this with someone who still believes wars are about the reasons stated. And understand that every crisis you witness is also a transaction you don't see. The oil trap is real, but the trap isn't for the oil. It's for you. And now you know.